All right, guys. Jason asked me to come out tonight, and he really wanted me to go back to the basics Chris, Jason's not here. Really go back to the basics from where we started on day one. And since there's a lot of new people here in the room, you probably haven't seen me speak before and who I am. Apparently I gotta move the mic closer to my mouth, and here we go. Glenn, you wanna go to the next slide? So I'm Ian, obviously, and I started in 2014. Currently today, we have about 75 properties at any given time. We have anywhere from 10 to 15 projects under construction. We're not really doing fix and flip anymore. Everything we're doing is building our rental portfolio. We actively grow it every month. Every year we'll do about 40 properties. With that being said, everything we do is single family based, so everything you hear me talk about tonight is going to be in reference to the single family stuff that we do. We do have some commercial properties and apartment buildings, and with our single family rental properties, everything we do is with subsidy tenants. If you check out the Hard Money Banker videos, I did a whole long presentation on just dealing with subsidy tenants. So with that being said, a little background about myself. I have another full-time job, and it's not just in real estate. I'm actually a fireman full-time for the city of Baltimore, started in 2008. That's how I got involved in real estate. I got hired in 2008, moved down here from Philly. I was jumping for joy. I didn't have to, I had a government job, right? Pension, benefits, healthcare, you give up a little bit of pay, but you should be able to have a very stable life. And we all know what happens in 2008, 2009. Next thing you know, public sector employees are the devil. They're robbing the cities blind. They change our pension, they change our health care, they change our schedule, they change everything. I mean, literally, we protect the city, and they're making us take furlough days, mandatory vacation days. To not, so we're losing pay. So while I was doing that, on my 4 days off, I would landscape. That's what I did prior to going in. I'd work in the trades. I was out there landscaping every day. We would work 2 10-hour days, 2 14-hour nights, 4 days off, and then right back to work. Well, on those two 14-hour nights, we'd work all day, go to work, go to the fire department night, go back out, landscape in the morning, go back to work that night, and then landscape those 4 days off just to stay busy, just to make ends meet. And with that being said, there had to be a better way, right? I wanted to have a family, rising healthcare costs, rising costs to have your kids, daycare, all those different types of things. I just couldn't foresee the future of how to be able to pay for all that. So, everyone has their why, and prior to my daughter being born, it was all about that. How could I make sure that my wife was at home every day, being able to take care of our daughter? We don't have to have someone else raise our daughter. That's a lot of the reasons we got involved with real estate. With the fire department, having a rotating schedule, being out all night, I would sit there and think, how can I make money while I'm at work and I'm asleep in bed? How can I get paid, right? If somebody's living in your house 24/7, they are paying around the clock. Yes, they pay you monthly, but every minute they're in that property, they are paying you. And that's what I thought about. That's how I came up with doing rental properties. So I was landscaping. I was starting to get tired of that, but I said, all right, I'm going to buy my first property. And this is where it all began. I decided to go out and buy this property, 3205 Lindale Avenue. Still own it today. It's over in the 4x4 part of the city. If you guys aren't familiar with the city, it's kind of on the edge of East Baltimore. It sits between Bel Air, Edison, and East Baltimore. I literally had no clue what I was doing. I said, all right, well, worst thing that happens, I'll only be out hopefully 25 grand, not really thinking about it. So I go out. These were the metrics of the deal. Over here on 3205 Lindale, it was a 3-bedroom property, 1 bath, needed full renovation. I wasn't really sure how I was going to renovate it. Purchase price was 25 grand. We purchased it in December of 2014. I'm sure the hard money lenders in this room would appreciate those rates, but that's what I got quoted. I didn't know any better, and I took it, so that cost some money. And the total loan amount, I was like, all right, I'll buy it for 25. I'll only put like 40 into this, and I'll be out the door. I'll do a complete gut renovation, and it's only going to take me like 4 weeks, right? Like it shouldn't be that bad. I'll do like 1 week of demo, 1 week of rough-ins, 1 week of sheetrock, and then we'll paint that bad boy. We'll be out of there, and let's lease it up. Well, if we go to the next slide, we'll see what actually happened. My media guy is doing media things. Thanks, Glenn. So what really happened? Well, I can definitely tell you I paid the 16% and 6 points. It was expensive. 5 months of construction. I definitely learned the hard way about having good guys, having a good, reliable crew, being able to complete the projects in a timely manner. I definitely went over budget, but I've yet to still figure out how to keep a project on budget. If you set $1 million budget, you will still go over some way, shape, or form. It just happens, right? You don't know what's going to happen when you open the walls of the property. The good news out of all of this is I did rent it for $12.50 to a subsidized program, and I did know that I liked that. But then there was 2 other bad things, right? I had limited credit, and I had no way to refinance it. I just knew if I bought this property, there has to be a way. I'll figure it out. I don't know how, but I'll do it, right? When I got in the fire department, I'll be completely honest with you guys, my credit score was in the 500s. I had a bad pass. Everybody's got a pass, but all you can do is work to fix it. So my credit wasn't the best. I had no way to refinance, and I really didn't have a plan. And that's going to be a common theme here. As you start to grow, you're going to see that having a plan and a strategy is very vital to growing a portfolio in a very short period of time. So, I have all this going on, and I decide to, next slide, I decided to double down. There's a house around the corner, right? Not too far. Well, let me take a step back. I get the property on Lindale rented out, $12.50. All my numbers are telling me everything's going good. I'm excited for it. There's another property around the corner. I still don't know how to refinance the property, but I know I'm just going to do it. I'm going to get out there. I'll figure it out. I got a subsidy, like I said, a subsidy tenant. The rent was coming in. This is working. I'll figure out the refinance. So I double down. I buy this house on Ravenwood, which is 2 blocks over, literally 2 blocks up the street, and again, I was going to figure it out. I was going to try to figure out how to get it refinanced, how to make it work. The only good thing that came out of this property was I told the guy that I'm not paying 16% and I'm not paying 6 points, and I did get him down to a more reasonable rate. And with buying that second property, just going from property 1 to property 2, everything that we learned from construction to closing the property to running it out, even just setting it up, in that 1 or 2 months with having a tenant in the first property, we learned a lot about the systems that we were about to implement over the long term of the portfolio, and it came out very fast. And you'll see when somebody's living in your house 24/7 that the little things that you appreciate might not be the best thing to put in a rental property, and the things that you don't fix might be the things that you want to fix in a rental property. It's just not worth the headaches. So after we double down, we finally get our refinance. I did it unconventional. You hear a lot of people saying, oh, you need Scott Freitag's in the room. He works for a local bank. You need to use a local bank and put it in your LLC, and you need all this protection. All I could think was, if I get this refinance done, I can cash flow $600 a month. I don't have to work any more overtime for the fire department. I can spend more time at home, and I can see a path to my goals. And so actually the guy that a friend of mine had refinanced his personal house, he's like, hey, this guy's great. He's out of Rhode Island, but just call him. So not knowing any better, I called the guy. He's from Embrace Home Loans. He's up in Rhode Island. I barely know the guy. And he's like, yeah, I got you. I got you. And I was like, sorry, to take a step back. I had worked with somebody else locally here that was a mortgage broker. She told me so it took me 5 months on construction. I was about 10 months in, and the local lady, the local mortgage broker was like, I'll get you refinanced. I know your credit's not the best. I'll get you refinanced. I'll get you refinanced. I'll get you refinanced. Well, the term of my loan is 12 months. And you hear a lot of bad stories, not knowing my lender. I'm thinking he's going to take the property back. I'm going to be out my money. This is the cash flow I'm looking for. This is what I want. And started to scare me. So when your back's against the wall, you become very resilient, try to figure out what you need to do. Called this guy in Rhode Island. He's like, dude, you got a good job. Your credit's not the best, but we can work around that. You pay a couple rate adders and we'll get this refinanced. I was like, there's no way. There's absolutely no way. So I skipped putting everything in my LLC because honestly, it didn't matter to me at that time. I didn't care if it was in my name, right? It was all about the cash flow and building the assets and doing what we needed to do to build a portfolio. So we get that refinanced in our personal name. I think it cost us $5,000 to get out of the loan because I didn't really do very good on my comps and knowing ARVs and how much money would be stuck in the property. And again, another learning experience. So I refinanced that one, refinanced the second one, and off we go, Glenn. Here we are. It's like Monopoly, right? Let's go around, buy all the properties. I got a system. Something that you guys need to know when it comes to funding is you can have 10 properties in your personal name, including your personal residence. After that, you got to put them in an LLC. I didn't know this. I get to property number 10. I'm like, well, now what? Am I out of business? Like, I don't know. That was another learning experience. I had heard, and I was like, yeah, that's probably just some law that I'll pay some fee and I can get past it. No, it's actually a law. You can't do more than 10 properties in your personal name. Once you get over 4, you need I don't know if there's still the same lending laws today, but it's 720 credit score, and you have to put 25% down when you get over the 4th property. So here we are, we're open for business, and this is when we begin to do a steady growth and steady working the computer. We have steady and healthy growth, right? From properties 1 to 10, and that was in a year and a half. So from 2014 to the end, I guess, if you count 15, I guess it was about 2016, 10 properties. I did them before I partnered up with my partner, was that, we found that you need to have a plan, or I found that you need to have a plan. You can't just go out and buy anything and say, oh, trust these guys' numbers. You'll learn if you're in the commercial space that all the brokers have the best property and there's nothing wrong with the tenants that live in there, or the multifamily property you're looking at that every unit's good to go and they get a $150 rate adder. You need to learn to vet your deals. It's something that we learned very fast. And with that, there's 4 parts to your plan. I guess I was getting ahead of myself. For us, it's finding the deals. That's key. You need to have inventory. If you don't have inventory, you're going to be out of business, right? Whether it meets your goal of your strategy or your plan, you need to know what type of inventory you need. You need to be able to keep your guys busy, or you need to know that you have the proper amount of capital to buy your 1 house a year, or if you want to pay your debt down, whatever it may be. The other thing you need to do, obviously, which I just talked about because I had these issues, is funding your deals, not only on a short-term basis, but a long-term basis. We'll get into this here in a second. You need to have proper systems in place. And finally, again, like I said before, you need to have a plan. Just don't do what I did. Don't go out there and randomly buy stuff and say, oh, I'll figure it out. I mean, maybe you do, and some people learn trial by fire, but it's all what works for you. Hi, Terry. How you doing? If you need to find deals, that's the man right there. Terry always has deals. Next slide.
Terry has deals.
So with that, obviously, Terry's a wholesaler. That's a great place to find deals. And again, if your aspirations are to have 40 houses done in 1 year, you know that you need to have 4 houses closing every month because of your backlog. So wholesalers are a great place. MLS, a lot of people tell me, oh, there's no deals left on MLS. I'm sure there's realtors here in the room that can help you. We find deals on MLS all the time. You need to know what you're looking for. You need to know where you want to be. Know your criteria, know who your sellers are. The banks are going to want certain requirements. Personal sellers are going to want another requirement. If you're buying turnkey properties, make sure you're vetting the information that's out there on MLS. You can do direct marketing if you want to take on that burden. If you're working one neighborhood and you really want to, at one point in the 4x4, I didn't know any better. I was like, well, there's like 1,000 houses back here. I'm gonna own all 1,000 houses. I thought I could do it. I would direct market everyone and own the whole neighborhood. But you'll find out direct marketing is good. It keeps the phone ringing. You know what's going on. But you need to know where you want to be. You don't want to waste much time on that. Another good one, we get leads all the time, especially in the fire department, friends, family, neighbors. We get a lot of guys in the fire department, their aunt lives in the city or their mom lives in the city, they want to unload deals. Tell your friends and family what you're doing. Spend some time marketing and let them know that you're in real estate. And if the deal doesn't work for you, there's plenty of investors, especially if you're coming here. There's plenty of Facebook groups out there that if the deal's not right for you, like Chris was saying earlier, maybe you can make a small fee and flip that deal. Neighbors are always a good one, especially when you're renovating. Sometimes they don't like the nuisance of you and they just want out. Other times, if you're there renovating, they love what you're doing and they want to sell you your property. We've gotten plenty of leads off of that. And obviously it's a lot easier because you know the deal, you know where you are. It should be easier to deploy your capital and all your resources. Craigslist, you will still find homeowners out there that are listing their properties on Craigslist. You got to get through all the wholesalers who junk that up. Again, know who you're dealing with. Make sure you're dealing with the seller direct. But Craigslist is a good one. Recently, I've noticed a lot more on Facebook Marketplace. You're starting to see some rental properties pop up. Every once in a while, you'll see someone that doesn't know where else to put it, and they actually put the property up on Facebook Marketplace for sale. It's been an interesting place to find leads. I don't think it's very consistent, but inside of Facebook Marketplace, you can definitely find leads, and the cool thing is you can move that arrow to anywhere you want and search a certain radius and really drill down. So with funding, this is the second part of your strategic plan. You want to be able to fund your deal from the beginning to the end. So you need to make sure you have your short-term debt lined up, whether it's going to be hard money, and short-term could just be acquisition. If you're looking to do something temporary, if you're looking to fix the property up, make sure you know what you need in the way of debt. Make sure you can present your deal to the bankers to get the loan that you need. And when I say bankers, it could be hard money lenders. Everybody wants to know what you're doing. With hard money, I don't know how many people are involved with real estate or if it's your first deal. The hard, and obviously these guys can talk about it a lot better at the round table afterwards. But in reference to hard money, your hard money lender wants to know who you are, how you're going to get your deal done, and most importantly, how they're going to get paid back, how you're going to refinance the property. Because all this stuff up here, which I didn't know, and that's probably why the guy charged me 16 and 6, because he's like, well, not only going to make a ton of money, this guy's probably not going to be able to refinance and I'll get the property back. There are lenders out there that still do that kind of stuff. As you start to grow, you'll find that bank lines are a very good option. You save, I think our bank line, we're quoted at, a few percent above whatever the current prime rate is. There's a little more capital intensive, but bank lines are nice. You know that you have that revolving line of credit. You know that you have capital to go out and deploy when you're ready to deploy it. The big difference maybe you'll see from hard money lenders to bank lines, banks always want to see you put cash out. Some hard money lenders do, but if the deal's right, some hard money lenders will fund that deal 100% and you could potentially be out of pocket $0. I haven't done it. There are other people out there that still do the credit card game where they'll use their credit card to purchase a property. We don't buy those type of assets anymore where that are cheap. Well, I don't have big enough credit card lines to buy houses like that, but if you're in certain neighborhoods, you can pick houses up for 10 grand. Right? So you could essentially do a cash advance, use your credit card. Just remember your interest rates are going to be crazy high. It is going to be simple or not compounding interest. But either way, it can get very expensive, but it is a viable option. And going back to short-term funding, credit cards are very good for when you're doing your construction, when you have to have your float capital to get your property fixed up. Whether it's a fix or flip or rental, it doesn't matter. You need to have capital to start the project before your lender is going to go ahead and fund you. So credit cards are a good option, especially Home Depot. I'm a big Home Depot guy. They have credit cards that are basically revolving lines of credit, which is pretty cool, and it actually extends the cash that you need a little bit further. And then everybody always likes to talk about private capital. This goes back to telling your friends and family what you're doing. If your friends and family are interested, you can obviously, or maybe not obviously, you can secure your property to their money and keep them in a very safe position. I will say with private capital, and I'm sure, maybe you've heard this before, the private capital out of all this is the money that you need to be the most diligent with, right? That's somebody else's life savings. That's somebody else's money that they've hard earned, that they're taking a trust and a risk on you. I know for us, when it comes down to private capital, that money's first. Before we ever get paid, that money's first. Bank money, sorry Scott, bank money second, then our money's last. So private capital, just remember, if you're gonna go out and do that, be very, very diligent with that type of money. So with the short-term debt, after you've completed your property, you want to make sure that you have long-term debt. If you're going to refinance and hold this rental property on for a very long time, there's some advantages to working with local banks, national banks, and your private capital. One thing to go back on, when I did my first 2 properties, they were in my personal name. I think in 2014, the market was down. Since it was in my personal name and not an LLC, they didn't see it as risky. We were getting 3.25% for a rental property, which is crazy low, because they see you as a personal, I guess, as a person, therefore they're willing to, they assume that you're going to take a little more that's your personal name, that you're going to pay that back. The other advantage to putting it in your personal name, maybe for the first 10, is that you can actually finance at 15, 20, 25, 30 years, whatever you want to do. You can extend that loan out for a very long period of time, and you don't have to worry about a balloon. If it's in your personal, well, you may or may not, but if you opt for a loan that's a fixed rate for 30 years, you know that in 30 years your loan's going to be paid off. 5 years from now, you don't have to worry about paying that loan off. And that's the big difference between dealing with a lender that's going to lend to your personal name, excuse me, and a lender that's going to lend to your LLC. A lot of the times when lenders lend to your LLC, you're going to see a little bit higher rates, and you're also going to see that it's usually a 5, 7, or 10-year term. And as you increase the length of that term, it's the bank's money, and they're going to get a little bit better rate for the 10-year because they're taking a risk that they're making a good bet on their money now. So as you refinance in your LLC, you're going to see things that are a little bit different. Something that you might want to put inside your pro forma that 5 years from now I need to refinance. That's going to cost me money. It's going to be an appraisal. It's going to be points. It's going to be title work again. It's something that you need to be aware of 5, 7, 10 years that's going to come along. Local banks are our favorite. There's plenty out here. Like I said, Scott's here. There's one here tonight. Local banks, they know your market, they know what you're doing. If you go there and maybe you're not the best borrower, but you have a good proof of history, you got a good track history, they can see what you're doing, they can come see the assets, they know the market that they're operating in. If you tell them, oh, I'm buying rental properties in 21214 and I'm doing full renovations and there's appreciation over there, most local bank lenders are going to know the zip code, they're going to know the type of property you're doing, they're going to know, if you go and tell them, yeah, the ARV is 220, 240, they know that you're a real person and you can present the deal properly. Also with the local banks, this is all stuff I learned. I'm just mind dumping on you guys right now. Take the time, do some YouTube searching, Google searching, whatever it may be. I'll be honest, I'm an idiot. I didn't know what a personal financial statement was. It was the scariest thing I've ever seen in my life. They got the one thing on the one side and the one thing on the other, and then they tell you what you're worth. I didn't know what it was, right? Assets, liabilities, and basically it's a balance sheet. I didn't know any better. The first time we did our first commercial loan, spend some time, learn that, and the other thing with the local banks, especially for your LLC, is present the deal, present your company, present who you are, give them a story. When these banks go back to their committees and say, hey, Ian wants to borrow $1 million from us, or he wants a line of credit for $1 million, he wants to know, okay, cool. This is your W-2 job, or you're a full-time real estate investor, you're operating in these areas, here's his personal finance, have all that information prepared properly. And I'll be honest, I went to a bunch of real estate meetings and I was like, oh yes, I heard it once or twice. I was like, yeah, I'm good, I don't need it. It helps the process probably by 2 weeks when you go there, present everything they need. Here's the asset, Here's what it's cash flowing. Here's the debt service coverage ratio. Here's everything that you need. Go take it to your committee. Let me know if I'm approved. Take that time to learn what your banks want. And honestly, with your plan, with any part of this, is know your end goal, right? All this relates back to your end goal. So there's your local banks. There's national lenders. I'll name a few. You got like Lima, Colony, or Corvest, whatever they changed their names to. Vizio. Those lenders are good. They're definitely going to be asset-based, but they're also going to be a little bit higher on interest rates. But if you want a non-recourse loan, you don't feel like going through all the underwriting, you just want to have your asset underwritten and you want to get this deal done as fast as possible, and you feel that the interest rate's fine, go ahead, use a national lender. They're out there, they're very easy to find. If you go on their site, they'll follow you around on Facebook for years, so you definitely will always know where they are. And again, back to private capital. I saw Mike Casey's here. I know he's structured a few deals with private investors that are actually holding the note over the, a 10-year period so he can pay that loan off. Again, with your private capital, I can't say it enough, that's somebody else's life savings. Take responsibility as it, it's not your own money. Put it up on a high regard. Someone's taking that trust in you. Finding funding, and then the systems. I'm sure a lot of people want to hear a lot about this. Is all this relates back to your plan and your strategy. So if you're like me and you're a W-2 employee and you want to work 5 days a week and you want to earn your money and you want to take all the money from your job and you want to roll it into your real estate investments, that's fine. You don't need to go out and wholesale and be a full-time real estate investor. You can easily go make your money in your job, take your money, roll it into your real estate investment. With that being said, you got to know how you're going to construct your property, setting up your rental units. You need to know how to property manage. You need to be able to manage your properties efficiently. You need to be able to know how you're going to collect rents and how you're going to handle maintenance calls. So I'll take a step back. So with the construction management for us, we have full-time construction guys, we have a project manager, we're on Streamline. We didn't start like that. It evolved as we grew, our company grew. There once was a point where I said, I'll hand it off to you can pay a construction management service company or a project manager. They charge you a 15% fee. There's guys out there. Again, vet who's doing your construction on your property. You need to lead them. You need to tell them what you want in your property. Don't let them go to Home Depot. At one point when we were flipping properties all the time, we literally made a manual. This is how you're going to flip a property for Equity Warehouse. You're going to go to Home Depot. Here's the SKU numbers. Don't get off that schedule. This is what you're going to buy. Well, we did that. It was very easy when we went to rental units. We would just change a few different things, and boom, there you go. Every single one of our rental units looks exactly the same, and this rolls right into setting up your rental units. When you're having your guys do your construction, you set it up the way you want it. For us, setting up our rental units, we go above and beyond. We try to beat the market a little bit because it comes back to renting your unit. It's rentability, it's sustainability, it's the durability of your property. So with setting up the rental units, we replace every piece of electric, every piece of plumbing, every piece of HVAC. We put central air in our units. The reason we do these things is, let's see, I had a tenant flush something down the toilet. Of course, they don't know what they flushed down the toilet and magically backed the house up after living there for 1.5 years. It wasn't their fault, so they say. And we put laminate floor over top of concrete. Well, we thought that was the best option. Well, we went in there, we had to rip it all out, and we had to put in tile because that's the better option. Well, trying to do a renovation while a tenant's living there and you're trying to help them out in a sticky situation because you're trying to get the property back to livable conditions, even though they caused the problem, you're still in their way. It's still a problem. Oh, I'm here with my kids at 8 a.m. Well, look, the guys got to work. They want to get in and out. Set your rental units up right the first time. That house on Lindale and Ravenwood, yes, I still own them, but I can tell you they're probably in the top 5 for service calls because I didn't do it right the first time, right? And honestly, I would feel bad selling it to anybody else because I know what I did wrong in there. So that's why we say put central air in. fix the plumbing, fix the electric, because if you have to go in there and try to trace a bad, there's still houses with knob and tube, trying to chase a bad fuse or a broken link in the system, it's a nightmare. Having galvanized water lines and a tenant calling in the middle of the winter with no water pressure, nobody wants to dig up the front yard with a new water line. If you see that stuff coming in your house, fix it on day one. These are all very important things. Central air, I know I keep bringing it up, especially since it's getting hot out, is the tenants go to put the window units in and they don't take the same care that you would, and they break the little piece of vinyl at the bottom. Well, guess what? Once they do that, you got to replace the whole window. And that's an issue for us because we deal with subsidy tenants. Every year we're susceptible to a annual inspection, and if that window's broken, we got to spend money and fix it. Another thing is when they put the window units in, they tilt them the wrong way. They don't necessarily always tilt them out. Tilt them in, water runs into your property, damages the sheetrock, damages the floor, leaks down, causes all kinds of issues. I've heard we have one unit that doesn't have central air. We do go out there every year. We put the window units in on usually like May 1st, sometimes April 15th. And every year we take them out around September 15th or October 15th. We take that responsibility because it's our unit, it's our house. We want to make sure that the property is going to cash flow. It's going to be taken care of for the long term. Everything we do is for long term. With setting up your rental units, also we do granite countertops. It's just an amenity. People say, oh, you can crack granite. Well, my wife puts hot stuff on the granite countertops all the time. I cringe, I'm waiting for it to break. I've never seen it break. I've yet to have it, I probably shouldn't say this, especially on camera, because I know who's gonna call tomorrow with a broken piece of granite, but out of 75 units, nobody has broken a piece of granite. The laminate wood countertops that you get from Home Depot, they're good, but you can never get the sink in there just right. And it always gets rotted out around there. With your granite countertops, the sink mounts under. You don't have to worry about the mildew, the grime, your laminate countertops rotting out. Tenants putting hot stuff on there. There are some better laminate countertops out there that you spend a few bucks more. Honestly, not worth it. Just go out, get the granite, go get the lowest grade. Don't buy it like it's for your house. Buy the nicest piece of granite you can. I think we did it at Glenn's house. He's been super happy. Yeah, he loves it. So, and it's just an amenity. You're competing against how many other people that have how many other units. Make your units stand out from everybody else. We do stainless steel. It's I think it costs us an extra $300, but when you're doing your property on day one, who cares? It goes into the construction cost. It goes into the cost basis of the property. And again, something I didn't know on day one when I learned is, I think Chris alluded to it earlier, is your tax implication and your depreciation schedule and all that good stuff that you get from spending a few more bucks, that over the long term of it, you'll get some offsetting things. Other than that, we keep it simple. Laminate floors. If we can salvage hardwood floors, take the time, salvage them. There will be nothing more durable than hardwood floors. We have an apartment building. That's the only time maybe you don't want to do it. It's a little bit louder with the hardwood floors. But honestly, we ripped the laminate out and repaired the hardwood floors. When at all possible, fix your roof on day one. If it's even questionable, don't even tar it. Just put a new roof down. Get the warranty. Do it right on day one. And our other favorite thing was setting up rental units. This might sound bad, but we delete everything. Delete whatever you can. I don't know why garbage disposals are, I guess, garbage disposals from everything from forks, spoons, baby diapers, if you name it, you can put it down the garbage disposal. They'll try to grind it. Dishwashers, rip them out. We've yet to have good luck with dishwashers. I think we only have one unit left and it's broken all the time. Take your dishwasher, literally put it outside. Oh, actually, Facebook Marketplace, there you go. Put it on Facebook Marketplace, put it up for 20 bucks, get rid of it. If not, put it in the alley and make somebody happy. Get rid of it. They don't load the dishwashers right, they back up. You're just asking for a problem. Let's see, screen doors. We don't do screen doors. They flap in the wind. We do security doors. If a tenant's willing to sign a long-term lease or if it's already existing, we'll put security doors on, the nice $99 metal one from Home Depot. It's an added piece of security, especially if you're in a neighborhood like we do a lot in Pigtown where values are appreciating. You still have some issues and you have a lot of good things going on. just give your tenant a little bit of added protection. Ceiling fans, take them out. I don't know, people like to hang off of them, put clothes on them to dry, do whatever else. Take them, they fall off the ceiling, get rid of them. Another interesting fact that we found, and somebody told me this a long time ago, and typical me, oh yeah, we don't need to do that. We always use the hollow core doors, you know, the $79 ones off the shelf at Home Depot, because you can go there and get them and be done. I don't know what happens in some of these houses. It must be, I'd probably go there and watch that instead of like the Royal Rumble, but they break, right? For a few extra bucks, and your guys will probably, excuse my French, but they will bitch at you because they are a lot more heavy. Get the solid core doors. They might not look as nice. I think you can get them with a detail in them now. Get the solid core door. I can't punch through them. I know somebody will break their hand, spend a few extra bucks, do them right.
Have you tried to punch through them?
No, I think it would hurt. No, my luck, my wife will put one in one of our houses, and you know how that'll go. So anyway, I think that's enough on setting up rental units. I have a whole list of stuff that you can delete. If you check out that landlordinglife.com link, there's a 20-minute presentation. I think I spend about as much, I could go on for hours about what to do. Go back, please. I could talk hours on that. So I'll skip because I want to keep it moving here. Property management, we take the property management on ourselves. If you do that, there's a lot of issues that you want to be able to handle. So if you have a W-2 job, know that your phone's going to ring, and if you're in a meeting with the CEO or whoever you talk to, or if you're at a government job, you're hanging out with Donald Trump or whatever you're doing, and that phone rings, guess what? Nobody ever calls to say, hi, hey, I love your house, right? There's a problem. Your phone rings for problems. So make sure you know how you're going to handle this. One point that I allude to is I don't give my tenants my cell phone number anymore. Sean, I think we talked about this once before. Don't give your tenants your cell phone number. For whatever reason, it doesn't even matter if you're the property manager. They automatically think you own the property. They want everything. Go spend money on Vumber. Go spend money on, well, Google Voice is free. So if you only got 1 or 2 properties, just get Google Voice. It's free. Have them call that. Keep that degree of separation. And collecting, so with that, you know, if you're going to self-manage, those are some issues that you have. Collecting rents is another one. Again, we deal with subsidy tenants. Some people aren't necessarily in the best situation. They need help. Old school works for us. We take a stack of envelopes. We got 1,000 made or whatever, self-addressed back to our office. Every year on January 1st, here's 12 envelopes. All you got to do is put a stamp on it. That's the least you can do. 37 cents or whatever it is nowadays. Go get a stamp. They can go right to the post office, get their money order, drop it in the mail, and make sure we get paid. I will say though, whether you're dealing with subsidy tenants or cash tenants, you got Venmo, PayPal. We use QuickBooks for our property management software, so we can receive payments, ACH, credit cards. You'd be very surprised how many people are resilient to get you paid, especially when it comes to the rent. Nobody wants to be on the street. It happens, but make sure you have the ability to collect the rent that is, least amount of time on you. There once was a time I would drive around between the 1st and the 5th, go pick up all 10 rents. You know, you were talking chasing $37 portions. Tenants weren't home. Oh yeah, I left it. I'm done with that. Here's the envelopes. Mail it to me. If you can't do that, we're going to have to go to the next level. Unfortunately, that happens as you start to scale. If you only have 3, 4 properties, maybe that works for you. If it's in the same neighborhood as you, whatever it may be, just know how you're going to collect your rents. With property managers, and I see this a lot, I think Chris was in the property management business at one point. It is a terrible business. It happens. You have to deal with it. There are bad property managers out there. It happens, right? You hear the horror stories, people's money getting stolen, whatever else. When it comes to that, you're not hands-free. You're not sitting back. Your new job now is not to harass the tenant. Your job is to harass your property manager, right? That's your link between you and your property. That's your asset. Guess what? That property manager isn't paying your bills. You're the one responding. You're on the hook with the bank or your buddy or whoever for that money. Your job is, hey, you told me the report's supposed to be here on the 5th. It's the 15th. Where's my reports? Where's my money? You got to stay on time, and you see it all the time. If you're going to hire a property manager, 1, take the time to vet them and try to do it before you ever buy a property so you know what you're going to do. And number 2, please take the time to hound them for what you need, because Worst case, and the worst part is at the end of the year, you need it for the accountant. You got to be able to hand them something, what happened at your property over the year. So that's my little rant on that. Take the time to manage your property manager. Now, Glenn, we can go to the next slide. All this, everything we just talked about, and those are just 3 quick points that we went through. We spend 2 days on this when people come to the office. We'll spend 2 days on all this, just 16 hours of going over every last bit of this. But your strategy, know your plan, know what you want. Is it for retirement? Is it for current cash flow? Is it for a legacy for your kids? Is it to pay for their college? What is it, right? There's every type of plan out there, whether it's appreciation or cash flow. Ours is cash flow. Our model, every now and then we'll buy a property that has appreciation. Our model's cash flow. What works for us, we try to net cash flow $400 a month. That's what works inside of our business. Know what works for you. When I first got started, that very first property on Lindale, my goal was to have, if my mortgage was $400, was to collect $800 rent. I did a little bit better than that, but that's where it starts. Just make sure it's covered. It gives you enough of a buffer. For those of you that are buying, asking about what's the appreciation, there are people out there that don't want to cash flow nothing but $100 a month or whatever it may be, buying a property down here in Columbia, and 30 years from now, they got a $400,000 savings bank because somebody lived in their property. If you're doing that model, just know, hey, if the AC goes up and it's going to cost me $7,000 to have it replaced or whatever it may be, how are you going to pay for that if you're only cash flowing $100 a month? So take that into account. Another thing with your strategy, are you going to take the time to build your properties, or are you going to work full time, reinvest your money and buy turnkey properties? They are out there. There are very good turnkey operators out there that provide very good quality housings with warranties and great cash flow on the properties. They are out there. Like I said, they are out there. It's not our preferred business model, but it is a viable option. You don't have to endure the building cost, and day one you're cash flowing. There is something to be said about that. With your strategy, with all these things here, are you doing single family? Are you doing multifamily? Do you want to do commercial? Everything we talked about today is single family for the most part. Now that we've grown, we're involved in a few of these things, but I would say pick a niche, get very good at the one niche that you're working, and as you work that niche, you can grow outside of there, but be very good at one thing. Our good thing for us is construction and single family properties. Debt and all the other stuff, we're still learning it all the time. But for us, construction's what we're good at, single family houses is what we're good at. And with your strategy, if you're doing the single family thing, are you going to use cash tenants or local market tenants? Does your market dictate that? Or are you going to use subsidy tenants because you want the guaranteed money from the government? That's what we deal with. That's what works for us. Not everybody has the stomach for that. We're susceptible to initial inspections, annual inspections, and a couple different requirements. So take the time to know what type of tenant. If you're going to work with subsidy tenants, make sure you know. If I've never dealt down here, if you're in Columbia, or I don't even know what county we're in, but Howard County. I can't afford it. Baltimore City, Baltimore County, I know those subsidy programs very well. I know what our expected rent rates are. I know how their process works. Double check with your local housing office how it's going to work. Know what other type of programs are out there. I'm sure DC, you probably can't even afford to buy a property nowadays to meet the subsidy requirements to even get good cash flow. Cash tenants, with that, again, if you're dealing with a property manager, that all this comes back to this, to know how you're going to get your tenants and go from there. I think that's it. So there you go. Does anybody have any questions? Go ahead.
So you talked about when you first started out, you said you went from 1 to 10 properties in like a year and a half. With the renovation, did you already have people in place when you first started out, or did you do the work yourself starting out?
The very first house, I got a crash course in plumbing, so I can tell you I still have plumbing issues there. I did paint the unit, I demoed the unit, I put the flooring in. I went out there and did the sweat equity thing. Good thing about that is you get to learn the whole process, and you hear the other guys talking, and like you're trying to do the plumbing and your framer's going, why are you doing that? You know what I mean? And you're like, well, why are you talking, what are you talking about? You get to learn some things if you're on that job site. Learning, there are, again, it's what works for you. For us, I had a kind of group of guys in the fire department. There's a lot of guys that have side jobs. So it was easy for me to relate off those guys and be like, hey, I got some work. You interested? You want to do the windows? You want to do the framing? And just kind of piecemealed it until I got a good crew of guys. And then eventually I graduated out of that circle. As you meet people, honestly, there's plenty of different ways to do it, right? Jump on Craigslist, make an ad, come to these meetings. Somebody already was asking about plumbing work, or I'm sure there's other contractors here in the room. Shoot down to Home Depot if you want to take that on, you want to deal with those issues. Picking up and dropping guys off, we don't do that stuff anymore. There's plenty of ways to get your house done. It's just about you being able to put the effort that meets your lifestyle and put 2 and 2 together, and it's probably right in front of you. You just got to find the right person to get it out of you, or you got to get it out of them, So.
How would you recommend someone ramp up 10 properties in 1 year?
The biggest thing is being able to, honestly, is knowing your strategy, right? So if doing 10 properties, buying them turnkey, you know that you got to put down 10 to 25%, 10% on the first 10 or 15 on the first 4. After that, you need 25%. Here's your capital requirements. Boom, you can go out. That'd be very easy to do. Work some overtime, right? For me, the way I was able to scale was I still landscaped on the side. I took every dollar that I earned, slammed it back in to the company, well, I guess company or my portfolio. And as we did that, it grew, right? Again, I didn't really know the tax implications and all that crap. Profits, this made up thing that you have, and then you got to pay taxes on it, even though you're taking that money and dumping it into new assets. But look, you got to do what you got to do to grow it. If it's something that's very important to you, you will find a way. If you got to pick up a second job, whatever it may be, I would say the easiest way for somebody to get 10 properties in 1 year is to skip the burden of building them out, and I would buy them turnkey. And I'd buy them locally turnkey. I wouldn't go out on market buying them turnkey. That's probably the fastest and easiest way to grow. Go ahead.
How did you find your first property?
I found my first property going to a local real estate event. There was a guy that was talking about subsidy properties, and I was like, yeah, dude, I'm kind of interested in that. And he's like, well, here, check this property out. I'm working in the same neighborhood. And I was like, all right. So I went out, looked at it. I didn't know any better. I picked it up, but it worked out. Honestly, going to the local groups, hearing the other people, there's enough experience in this room alone, just with the few people that I know, that can give you the exact advice. If someone in here is selling a deal, you can probably bounce that idea off of someone. I'll tell you, the best way to vet a property is go to a lender. If somebody's not going to give you the money for a deal, it's probably a crappy deal. There's a reason that the lender's not giving you the money. So, go ahead.
So you said the first 10 properties you bought in your own name.
Yes.
And then eventually you became an LLC.
Yes.
What did you do with those first 10 properties?
So I slowly rolled them back into our portfolio. We decided that it wasn't worth saving the interest rate. We're doing the last 3 here coming up. It's about a $2,500 retitling fee here in Maryland, or maybe in Baltimore City, I don't exactly know. It's about $2,500 to retitle, because I thought I was going to be slick one time and own a house in cash. And then I was like, shit, I don't have enough cash. So then I had to pay the $2,500 to retitle it back to my name to bleed the equity out of that one. So either way, it costs you money. But it's about $2,500 to switch from one way or the other to retitle.
That helped you get started doing it in your first name, in your name?
Yeah, mostly because I didn't know any better, and I knew I could get the money based on me. I didn't really know how to do the whole commercial bank thing. That's what worked, and some of it might have been ignorance, but I knew this guy, like I said, Embrace Home Loans. I think he's at Citizens Bank now. I'll gladly give you his info, but he knew who I was, I knew who he was, he knew my information, he knew what I was doing, and he was able to say, yeah, dude, let's do the 10, let's get it done. When you're ready, I'm ready. And I would call him every couple months if I wasn't doing something. just to be like, hey, what's the lending laws look like? You know, just in case anything changed, to make sure I knew I still had a way to get out of the properties. So.
Of course, time frame for refinancing. What is the general time frame for refinancing?
So general time frame, I think, Scott, maybe when it comes to the round table, stop by and talk to him. I know a lot of lenders right now, if it's under a year, they're doing 70, just call it 70 to 80% loan to cost, versus if you own it for 1 year, it's loan to value, right? So if you have a piece of paper that says, or your receipts that say, I put 100 grand in this property, they're only gonna give you $70,000 back. But if the property's worth 200 grand, you say, well, wait a second, loan to value, I would get back 150. You know what I mean? So that's the big difference. If you're gonna refinance it in that short period of time, especially on the commercial side, it's usually loan to cost. Your personal name, some lenders will still do 6 months or better. Again, know when it's in your personal name, what those requirements are versus your LLC, and be very clear, is it LTC, loan to cost, or LTV, loan to value? There's a big difference, especially if you have $100,000 of equity sitting out there that you're expecting to get back. I know a lot of people like to use the BRRRR method, buy, renovate, rehab, or buy, renovate, rent, refinance, do it again. That could put a big wrench into it. Oh yeah, I got this great deal, but you're leaving $50,000 on the table because it's loan to cost, not loan to value. You want to take a short break and then do the round tables? Sure. Yeah.
Please give me another round of applause. Thank you, my friend. He knows his stuff, doesn't he? What do you guys think? Yeah, you can tell he's under pressure.
How long did I rap for?
Okay, so we're going to take a 10-minute break, and then we're going to set up 4 roundtables for just informal discussion. One will be Terry Royce, the wholesaler. Ian will be there for additional questions about rental things. We have Scott Freitag talking about local bank commercial financing for rental type properties, and then we also have Tony from Hard Money Bankers talking private money. So take a break, do your thing, and we'll be back in 10. Thank you.